It's always a good sign when long-term critics of stock eventually become big advocates for its growth, usually following the release of a massive catalyst for this growth. In August, Jim Cramer and the Fast Money halftime report panel compared Tesla to General Motors and Ford. And at the time, Cramer didn't hesitate to state that Ford remains one of his favorite stocks. However, Tesla has found its way to becoming the investor's current favorite stock. According to Jim Cramer, Tesla has hit its lowest point, and predictions are going towards it significantly growing in the company's stock price over the next years. Hey guys, welcome back to Tesla Tomorrow. Jim Cramer is an American TV host and investor popular for his show Mad Money. Cramer is a big fan of the stock market and no doubt a Tesla enthusiast. His recent statement about Tesla has further reiterated his bullishness on the car company. And in a recent interview with CNBC, Cramer was asked what automaker he would rather buy. And the surprise was right there. The stock investor picked Tesla. It's important to note that although Cramer has been a big fan of Tesla, he was extremely bullish on the other automakers like Ford. So how did Tesla become Cramer's favorite stock? Let's find out. But before we do, if you like this type of content, don't forget to hit the like button, subscribe, and turn on that notification bell to keep up to date on everything going on with Tesla. Jim Cramer previously said it's good that Ford CEO didn't spin off the EV business, adding that the golden cash is generated by ICE vehicles. Speaking on this, Jim Cramer said that he would take Ford CEO Jim Farley over Elon Musk in 2026. Cramer also said that Ford had destroyed Tesla's plan with its announcement to reach 2 million cars annually, adding that the company's ambitions are remarkable. He further disclosed plans to generate a 10% adjusted operating profit margin by 2026, although Ford only sold roughly 64,000 of its all-electric Mustang Mach-E crossovers globally in 2021, and posted a 7.3% adjusted operating profit. At the time, the Mad Money host told Tesla investors to consider selling their Tesla shares rather than keep them for a long time, as most investors plan to do. But now Jim Cramer has described Tesla as a sleeping giant, noting that Ford recently missed Wall Street's fourth quarter earnings expectations. This is after Chief Executive Jim Farley said that the company should have done much better last year, adding that the company has left about $2 billion in profits on the table that were within its control. On the other hand, Tesla posted stronger than expected fourth quarter earnings, and its CEO Elon Musk said orders for January to date were the strongest in the car company's history, and were nearly twice the rate of Tesla's global production. As a result, Jim Cramer chose Tesla over Ford and GM, adding that Tesla has no more insider selling, and he believes that this is good for the car company. Tesla shares have started taking off despite catching a couple of price target cuts from analysis. And this is because Jim Cramer has indicated that Tesla may be immunized from negative coverage at current levels. This is not just happening with Cramer, other analysts also see great potential for the automaker in the near future. According to Jim Cramer, Tesla's rally is thanks to a batch of strong company earnings. Tesla's stock price has been rising as investors digested the batch of earnings and new gross domestic product data, showing the US economy grew by a higher than expected 2.9% in the fourth quarter. Jim Cramer believes that during earnings season, what matters is companies and their CEOs who should be smart enough to direct them. He added that contrary to what many believe, the economic data didn't drive the trading season's rallies. Speaking on the topic, Cramer cited that the industry is in an earnings season, and so stocks are doing well because many of them deliver good numbers. He said, "It's very confusing if you're on permanent negative autopilot because you only pay attention to the Federal Reserve. If you watch the individual companies, these moves will be a lot less surprising. It's no longer news that Tesla's been cutting prices, and according to Cramer, the company has the margins to be able to do so." Jim Cramer stated that he doesn't want to bet against Tesla when the company's stock is down so much, and it is obvious that only a few investors would want to do that. In fact, many are beginning to raise their price target on the stock. Despite the negative sentiment from analysis, Tesla shares have been up multiple times this year after a rather disastrous year for the company's stock, and the struggles have been massive for Tesla and its investors, and a series of events caused the stock to drop multiple times in the previous year. Tesla recently released fourth quarter results, and although some investors claim that the results fell short of expectations, Tesla numbers were still recording breaking numbers and indicating a good start for the car company to make massive earnings this year. Tesla shares were down more than 60% over a one-year period, but the stock is starting to go up the chart, especially after recent price cuts in China and the US. Jim Cramer noted that most of the high-quality tech names, which were hammered due to the Fed's unstoppable rate hikes last year, are the ones which have led the digital transformation journey for the world, and multiple industries are dependent on them. According to him, in 2022, the biggest and most prominent growth stocks on Wall Street, including the likes of Microsoft, Amazon, and Apple, crashed and burned. And nearly all of these are variations on the same story. He added that these stocks were cut in half when their businesses had no such come-downs, and their stocks got way ahead of themselves before the Fed took away the easy money. There is no doubt that the current recession has been hard on automakers, as many have struggled to keep up with their production and sales. Musk also warned in March that Tesla is seeing significant inflation pressure in raw materials and logistics, and price cuts in China seem to have come after Musk said he sees elements of a recession on the market. However, there is no indication that there is any cause for alarm. In fact, Tesla has huge demand and sales in the fourth quarter of 2022 and has started making even more and better sales this year. The car company plans to push global production of its top-selling Model Y and Model 3 electric vehicles sharply in the fourth quarter, and to build on that growth in 2023 as newer factories in Austin and Berlin ramp up production. Musk has stated that if Tesla's production forecast is achieved, it will put the car maker on track to meet Musk's goal for production in the coming quarter and put Tesla closer to the scale of the German brand BMW by the end of 2023. Likewise, the automaker expected a new vehicles platform is one other huge catalyst to look forward to. Tesla wrote about the project in a press release, stating that it plans to host its 2023 Investor Day soon, and the event will be live streamed from its Gigafactory in Texas. According to the car company, its investors will be able to see its most advanced production line, as well as discuss long-term expansion plans, Generation 3 platform, capital allocation, and other subjects with Tesla's leadership team. There could also be talks about capital allocation during the Investor Day, and it could include the stock buyback program that Musk originally announced in October. According to Brett Winton, chief futurist at ARK Investment Management, he believes that if Tesla successfully produces this low-cost EV, it will once again set the standard for the market just as it has done with its previous models. The Tesla bull had previously given his take on innovation and how this can be a massive edge for companies. While consistent inflation, rampant interest rate hikes, COVID-19 lockdowns in China, and Russia's invasion of Ukraine led investors to dump risky tech stocks and pile into safer bets, Jim Cramer explained his rationale for future stock picking. According to him, he believes that these beaten-down tech stocks can make a drastic comeback after the Federal Reserve stops its fiscal tightening. Cramer said that once the Fed relents, he'd much rather be in big tech or the top cloud plays or the better-run chipmakers like AMD and Nvidia. While analyzing stocks that could have a massive comeback, Cramer also noted that there are many pure pandemic stocks that potentially cannot recover from previous year's lows. However, although Cramer backed Tesla like he did at the end of November, investors are still watching the stock closely as the selling pressure has ramped up over the last few months. Analysts are highlighting the downside potential in Tesla shares as they gear up for whatever may happen in the next year. Likewise, even though the stock is trading way below its expected valuation, some long-time Tesla bulls are seeing the value in the lowered price. What do you think about Tesla's stock performance this year? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.